Good morning, everybody. Welcome to another Wealth Coffee Chat. A few of the early birds up and at it. David, good morning. How are you, mate? Luke, that's always up and at it. Mick. Hey, Mick, let's catch up. I know you've got something on your plate that you want to chat about. Let's book a catch up, mate. Let's talk turkey. Anyway, Bryce. Good morning, mate. Good to see you, Aaron. Donna's here too. Mayumi. And Stu. How are you, mate? Good to see you. Happy days. Hey, folks, welcome along. Welcome to another Wealth Coffee Chat. As always, good to see the early birds up and at it. Do some little intros and warm-ups just as we let the Facebook Live and YouTube Live get a little bit going. Jason Witten's my name. If you didn't already know, most of you do. But if you're new and you're stopping by, you might be new to our coaching and mentoring program. Welcome, if that's the case. You might be new to our socials channels. That's awesome. Let us know where you are coming from. Where do you reside in this wonderful world that we live in? Morning, Alison. Good to see you. As always, James is here too. So, hey, folks, thanks for joining. Great to have you on this morning. Hey, today I wanted to talk about the idea of the world of discount and instant equity. Part of our conversations over the years is how do you, as a property investor, create value, excuse me, but croaky, create value and grow your portfolio's equity and wealth and value as fast as possible. And some of the ways is how you buy your properties. Some of the ways is where you buy them. And Sam addresses this in his Forex growth strategy. But I want to talk about the idea of discount today and how you buy them. But, let's just quickly do a recap on what this looks like. What are the strategies for purchasing, or how can you purchase a property? The ways you can buy something, or the ways you can do it. Well, you can buy a property at a discount. I'm going to talk about that today, how you do that, and what you can do. You can buy a property and renovate it. Not my favorite, but a lot of people are very good at that. You can buy a property and either what we call strata or subdivide, splitter blocks and some little blocks of units and things like that. There's ways to do that, folks. as you go. You can buy some land and you can build. I like that one. Number 5, you can buy off the plan. And we're going to talk about that today, or the idea of how you get discount in off the plan. And then number 6, you can get involved in developing, adding massive value to your property in a way to maybe turn it from one piece of real estate into 3 or 5, maybe even many more than that. So today we're going to talk about the idea of discount and discount in a way that when you purchase that property, you're purchasing for less than the value. You're purchasing less than it's worth as we go. So let's talk about that. You know, there's other stages in here where where the market, drives the growth, and the location and the type of property and etc. But this is kind of like what you choose at the beginning of a property deal. How can you do it? What's going on? And how can you create a deal? Tell you, let me give you a little quick history lesson of the experience for me in the world of instant equity discount deals. And the first version of this instant equity discount deals started many years ago in the world of the world after the GFC. So 2010 to 2012, okay, the GFC world. In the GFC, we were actually buying or negotiating properties from liquidators back in the day, like banks and liquidators. And we were getting anywhere from sort of 15 to 30% discount off the valuations. All right, valuations. This was back in the day when you could use valuations a bit better than you can today. After this GFC stage, what happened is the insurers got involved and sued everyone. And then the valuers now are like cats on a hot tin roof. But that's a chat for another conversation. Anyway, valuations, just so you guys, valuers and valuations are not done for you. You guys know that, right? Right? And they're not accurate in any way, shape, or form of what the market value is or the true value of a piece of real estate is. It's a valuation done for lending purposes, et cetera, et cetera. Anyway, let's talk about this. Let's go over to of recent times, let's say 2018 to about 2020, folks. There was a little section in here. This was the combo of APRA and the good old COVID world. And in the form of discounts here, this was actually cash backs and incentives, okay? Cash backs and incentives, like real dollars, cash backs and incentives. We did a heap of those types of deals with you guys. And some people were getting, $30,000, $40,000, $50,000 back, cash on settlement, plus buying the property at a good price, et cetera, et cetera. So that was a style of discounts. So discount, instant equity. If you think about, all right, well, how can we express that in a form of value? That's what was going on. So let's fast forward to right now. So we're talking 2023, probably to, I don't think it's going to last very long, this. We've probably got, let's call it mid-23 to mid-2024. So we've got about 12 months. Yeah, that's it, Luke. Absolutely. We've got about 12 months. Now, Luke's already on it. Allison's already sort of thinking, all right, well, I've tasted a little bit of this. So tell me, team, what do you think might be opportunistic here in the world of property investing? Okay, so we're going to talk about something in a minute. We're going to talk about, let's say 2020, 2021, 2022, and 2023. All right. So we have had pretty significant decreases. We've had pretty significant decreases, team, in the supply chain, right? And I'll show you a few stats in a minute. But, what has happened? So interest rates low. They were very low in 2020, and they've risen, okay? That's slowed down buyers. It's slowed down supply. Supply was already rubbish. Now, the magic trick right now, not the magic trick, but the opportunity in the marketplace is this sweet spot of some things that have started they started construction in this sort of 12-month period, and they're going to be finishing construction in sort of 2023 and early 24, okay? And there's an opportunity between this kind of 12 and 24-month time frame that is showing up right now as the new version of a discount instant equity. So let's talk about what that looks like today. So let's dive in, right? So I'm going to take you through this and you can check this one out online. Charter Keck Kramer, a very good research house when it comes to the cost of building properties, markets, and so on. They're very good data collectors and are showing some information about the pricing of the new supply coming to market. Okay, new supply. And this report actually right now is focused on Melbourne, but Melbourne has the biggest gap and the biggest opportunity because of, well, maybe there's a Muppet running the state at the moment, but it has been for a while. But, that problem is showing up with opportunity as well. So let's talk about this. Let's talk about the opportunity that's under our nose. So let's go down here. So in the Melbourne market supply, they've done an analysis across 10 suburbs in Melbourne to show that several of the 2023 release of off-the-plan value rates have risen by 15 to 25%. So, okay, what does that mean? So as of 2023, the new supply is up. The new supply pricing is up between 15 and 25%. Why is that important to us? You go, yeah, okay, that's nothing. There's no rocket science there, Jason. What's going on? Well, what we want to understand, folks, is that there is a supply. There's a certain amount of supply. Tell me, folks, where am I going with this? What supply is landing now that we can take advantage of, and what I'm calling, and what I know exactly what will happen. I've done this for 25 plus years, folks. There is instant equity in deals right now because of the inefficiency of a marketplace. And there's a certain niche that we can grab an opportunity in, right? Where are these discounts? All right, let's have a little look at this. So pre-COVID, before COVID, BC, before COVID, the off-the-plan value rate of an average piece of real estate coming to market, this is apartments, houses are a little different, but there's some opportunities there too, was 10,000 a square meter or less. Okay, that was the average, or less. So this is the square meter rate. Now this might be a bit technical, so stick with me. I'll get to the punchline in a minute, but I need to show you guys the detail that Sam and the team drill into to bring value to our mentoring customers, right? So, team, look at this. It's now closer to 12,000 a square meter. Better quality properties, flight to quality, folks. You all of us have heard Sam talk about that. Were around 12,000 before COVID, now about 14,000. What does that mean? There's a percentage, 20% plus in instant equity in the difference between an off-the-plan deal from earlier in the COVID space and now afterwards. Okay, so how can we take advantage of that? And there's a few things. The interest rates have risen. We all know that. There's something quite interesting here, though. The gap between apartments and houses is pretty sizable, and certainly in Melbourne, it got pretty massive there when it came to. But right now, it's at one of the largest gaps we've seen in a long time. What does that mean? What does that mean, folks? It means that apartments are going to be the better priced ones for the short term anyway. Are going to be a little bit more budget friendly. Morning, Jeff. Morning, Rodney. Morning, Sarabjot and Chris. Good to see you. So, what does all this mean? Construction prices are up, et cetera, et cetera. Let's cut to the chase, Jason, and let's talk about what we can see here. All right. So, supply, folks. This is Melbourne. Check out the disaster. This is a fucking disaster. Look at the disaster, ladies and gents. This is a disaster of epic proportions. And nobody's talking about this in the way they should be. All right. Just do the percentage of the total number of apartments coming into supply, and during with COVID, APRA nailed it already. So APRA fucked it. Excuse the French, right? APRA ruined it. Then COVID gave it a kicking. There was a little bit of comeback here because there was a little bit of excitement with low interest rates, and then interest rates gone up, and this is just absolutely shit itself. And it's not coming back anytime soon, folks. Right? So what does that mean? What does it mean to us as property investors? Well, it means there's a bloody opportunity here, folks. There's an opportunity. So some of these properties are actually now, this is the opportunity, some of these properties, and maybe even some of them, depending on how long it's taken to build, are going to land in completion in 2023 and 2024. What does that mean? It means we can get a massive discount against the existing off-the-plan values that are being sold today in comparison to when they were priced and the construction of a property started. Okay? So let's have a look at what that means. Hopefully you're with me here. Give me a shout out in the chat if you go, yep. Just say, yes, Jason, still with you, understand what you're talking about. Or no, Jason, you sound like a crazy guy and I have no idea what you're talking about. Just give me a yes, and then I'll feel better. Right, so what does it all mean? Final thoughts. I'll give you some final thoughts. I won't do that bit. Here's some final thoughts, right? The per square meter rate right now in, let's say, Melbourne, is the new supply is selling anywhere from 12,000 to 14,000 a square meter. SQM. All right, square meter. So the new properties that are being sold today, and there's the supply is slower. Those properties will be delivered to market. There's not an oversupply, so those prices will hold up. There's no there's no there's too many, there's too many properties and not enough buyers, etc. So this is the new value, the new pricing flowing through to market. And when they land in 12, 18 months, 2 years' time, they will reset the pricing, new price values, okay? They're being sold today. The small amount of projects that are getting off the ground are going forward. And, most of them are good quality, obviously. What does that mean? So let's have a look at existing properties. This is where this discount thing comes in, folks. There is a supply, an amount of supply. Quickly go back to our little supply chart. There's an amount of supply that has come from 2021 and 2022. There's too many twos in that. There's an amount of supply that has come through the market, and is landing here in 2023. And there are a few things going on. Number one, some of the people who purchased the properties off the plan in 2022 and 23 can't settle now in 21 and 22 22 can't settle in 23. So some of those properties are falling over. And then some of the developers held back some properties because they wanted to sell them at the end, right, of their projects. And there's a strategy around that, right? So let's just have a look at this right now. Sam and the acquisitions team have gone out and put a few deals together. And this is just an example of some great deals in the right marketplace. Okay. So this property here, Hampton East, pretty good spot down in Melbourne. Very nice developer. So we've got hold of that property for you guys at call it 9,000 a square meter. So 9,000 a square meter, and the value in the market, and probably a bit more than 12,000. So I'll just be conservative. The new properties, the newer off the plan being launched now and being sold. This one is about 2 to 3 months from completion, right? Okay. So it's almost done. Okay. This is not off the plan anymore. It's like it's a subject to finance. It's going to be complete in a couple of months. The new value is 12,000 plus. So folks, do the math on that. Do the math. Tell me in the chat, 9,000 to 12,000 a square meter. What's the actual market discount? Now, the valuer is not going to agree with you because they're conservative historians, but the future is already in play, folks. The future is already in play, already selling properties at 12,000 a square meter. The construction price and the end value of those properties are not going to come down. There's no oversupply anywhere. The only thing that is in high demand is properties. And then you're going to get more people in. You're going to get more people in the future team. All right. More people in the future. More buyers. It's going to be fine. So, yeah, Chris is there. It's a 25% discount, right? So who wants to make 20 to 25% instant equity? Like, pick me, folks. Pick me. So this is the opportunity, because discount shows up in really different ways in different market cycles. It's never always, the developers dropping their pants because they're in trouble, right? That was the GFC. They were all in trouble then. APRA, different times, right? So 25% discount, very good property. Away you go. Let's have a look at a couple of others. This one I think is West Melbourne. Okay. This one's complete right now. Complete. You can walk through it today. I think a few people did. Again, 8,800 a square meter, 5% yields, which is excellent. Not too bad. Very nice property. It completed literally last month. Why? And people say, well, why? And another one here. Ivanhoe, 8,000, another 9,000 a square meter. So people say, oh, well, why doesn't the developer sell them for more if they can? Well, they can, but what is their problem right now? When these buildings, folks, what's their problem right now? When they're complete or almost complete, like, this one again is like 2 to 3 months from completion. What's the developer's biggest problem? There's two problems, two big problems, and one not much of an issue for some of them. Okay. Does anyone know what's their biggest problem when they're very close to completion? What is their biggest cost? Not pre-sales, Alison. So they've already achieved their pre-sales. So this is the other end of the project, coming to completion, coming to cash flow from sales. Yes, Tim. They haven't settled. Exactly, settlements. So they haven't settled yet. They haven't extinguished their debt yet. So their debt is at peak level debt. So imagine having your building here almost complete. Your debt is, $50-60 million, and you're paying interest on that. So every day, the cost of your interest is just chewing its head off, right? Every day, it's $100,000 less profit. So, yes, you could absolutely put your prices up 50, 80, 100 grand even, and sell those properties for more. But the problem is the speed at those sales in the marketplace right now is slow. So that could take them 2 or 3 months to resell those properties, right? At a higher price. It wouldn't, the higher sales price won't outstrip the cost of the interest, folks, right? So their construction cost and their pricing is from 2020 or 21. They just want them sold. They've already got their profits in. If they can get them sold quick, the prices were a good away to go. So anyway, there you go. Does that make sense? Right? If you want a 20% discount or instant equity, right now the market is showing if there's pricing from 2020 or 21 and maybe even early 22, and the completion is landing in late 23 and early 24, there's an opportunity in there if the right property is there to create some instant equity. And where can you see that in your marketplace? Now, some of the markets are moved on. Now, Brisbane doesn't have this instant equity stuff going on. Brisbane doesn't. Sydney does, actually. Sydney's got a few, not as many. Melbourne has because of the longest COVID lockdown and it's taken longer to recover. But interesting times. Anyway, there you go. Bit of a strategy, bit of a conversation around instant equity and discounts. Where's the opportunity in the market inefficiency and madness at the moment? That one's a pretty good one. So thought that might be worth talking about today. Interesting times. When everyone else is sort of sitting out and sort of, wondering what's going on, you as a property investor, educated, with a strategy and good support can really accelerate your wealth as you roll. So there you go anyway, team. That's it from me. Wealth Coffee Chat, done and dusted. Went a bit over today, 10 minutes. I just don't ever think I'll finish it in 20 minutes. I probably could if I just stuck to one thing. There's too much to talk about. Always is. Anyway, folks, that's it. I'm done. Thanks for joining me today. Join me tomorrow for another Wealth Coffee Chat if you're up for it. Around about the same time, 8:10. You guys know the drill. Until then, remember, there's a couple sayings around here. This thing's marathon, not a sprint. It takes time to build a property portfolio. And one of the most important things is to buy a good property. Buy well. Don't bloody sell it. Go the distance. Anyway, that's it from me. Thanks, team. See you tomorrow. Adios. Bye-bye.